Hi, this is James Shug with Westpac London's end of day report for Thursday, the 20th of December. Well, it was another treading water day on US equity markets today after the late sell-off yesterday following the Republican House Leader Boehner's comments that kind of suggested they were still going to play hardball with the last $200 billion that hasn't yet to be agreed between the White House and Congress in terms of these fiscal cliff negotiations. In fact, the House looks like it's going to have a vote on the Republicans' measures. Shouldn't get through the upper house, controlled still by the Democrats, and even if it were to, it would be vetoed by Obama. But it's adding to the sense that the game still has a fair way to be played. Markets aren't sharply down, aren't sharply high, as I say, just sort of very choppy around unchanged for the Dow. In fact, UK markets were totally flat today, no change at all to record at the close of trade. We had retail sales figures here which were flat in November after a decline in October, so a pretty poor two-thirds of the fourth quarter for consumer spending in the UK. The French market up 0.2%, the Germans flat, and modest gains in Spain and Italy as well. On the US data front, third quarter GDP growth was revised up from 2.7 to 3.1% annualised, mainly due to a higher net exports component, although personal spending was estimated a little bit higher as well. The existing home sales in November posted a 5.9% rise. They've been up 4 months now in the last 5 and are running at their highest pace since 2007, apart from in late 2009 when the tax credit for home buyers was coming to a close and there was a spike in sales to an even higher pace. But more evidence that the US housing markets has turned the corner. The Philadelphia Fed Factory Index for December was very sharply stronger. From -11, it jumped to +8, with the orders, shipments and jobs components, all of which were contracting in the November report, jumping 15, 25 and 10 points respectively. Now, a big part of that was the disruption from Sandy, the superstorm, at the very start of November, which would have impacted that survey. But nevertheless, the underlying story does seem to be one of more optimism coming through in that part of the US. Jobless claims rose 17,000 to 361,000 in the latest week. Look, the range for most of this year has been 342,000 to 392,000 new claims a week, apart from a brief spike higher than that in the immediate aftermath of Sandy. So even at 361, claims are still at the lower end of the range, consistent with modest but not spectacular performance of the labour market. That's about it really, a few other bits and pieces, but they're the main data points to mention. The New York Stock Exchange itself is going to be sold to an Atlanta-based commodities and futures trader, Intercontinental Exchange. They tried to take over the NASDAQ earlier, that was blocked, but looks like this is going to go ahead. Commodity markets, speaking of which, the vibe there is pretty negative, with oil prices down 0.4% today. Gold's off 1.7% at $1,639 an ounce, and copper prices are down 1.8%. The oil price is 89.61. Aussie dollar, it's at 1.047, which is down about 1/10 of a cent or so compared to yesterday. Compares to 1.06 at the end of last week. So a little bit of downward momentum coming through in the Aussie dollar today and indeed over the past week. Apologies, there was no report yesterday. Logistical issues meant it couldn't happen. We'll be back again tomorrow. That's Friday the 21st, but that'll be the last one for this year. Okay? Look forward to seeing you tomorrow and next year.